Aerodrome Finance has done over $80 billion in cumulative trading volume, and it's still sitting at rank 97 on CoinGecko. Let that number sink in for a second. $80 billion worth of trades routed through a protocol that most of your group chat has never heard of. That's not a small DEX grinding it out on some ghost chain. That's a machine, and it's sitting underneath one of the fastest growing ecosystems in crypto right now, Coinbase's Base chain. So why hasn't the price reflected that? And more importantly, does the setup still make sense for your portfolio at current levels? That's exactly what we're getting into. Here's the context you need. Base chain launched in mid-2023, and it has been on an absolute tear. Monthly active addresses have grown from basically zero to consistently competing with Arbitrum and Optimism for L2 dominance. And Aerodrome isn't just another DEX on Base. It's the liquidity layer. When a new project launches on Base and needs deep liquidity pools, they go to Aerodrome. When a whale wants to swap with minimal slippage on Base, they route through Aerodrome. It's the plumbing. And the plumbing always gets paid. Now let's talk about what Aerodrome actually is, because the surface-level explanation of it's a DEX completely undersells what's going on here. Aerodrome is a fork of veAERO, which itself was a reimagination of Curve Finance's vote-escrowed tokenomics, but built natively for the Base chain ecosystem. Here's the mechanic that matters. When you lock AERO tokens, you get veAERO. veAERO holders vote on which liquidity pools receive AERO emissions every week. Protocols that need deep liquidity on Base have to bribe veAERO holders, in real dollars, in real tokens, to direct emissions toward their pools. So the more protocols that launch on Base needing liquidity, the more demand there is to bribe veAERO holders, which creates buy pressure on AERO itself. It's a flywheel. New projects launch on Base, they need liquidity, they bribe veAERO holders, those bribes make locking AERO more attractive, more AERO gets locked, supply shrinks, price goes up. The growth of Base chain and the value of AERO are genuinely interconnected, not in a speculative narrative way, but in an actual cash flow way. This is completely different from holding a token and hoping adoption happens. The adoption is the yield mechanism here. If you're finding this useful, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. So what does the price picture actually look like? AERO has traded between roughly $40 and $2.80 in its short history. Right now it's trending on CoinGecko, which typically signals a wave of fresh retail attention coming in. The question for any serious investor isn't whether it'll pop on the trend, it's whether the fundamentals support a sustained move. Here's the bull case with real numbers behind it. Base chain is processing consistently over 2 million transactions per day at peak periods. Aerodrome's total value locked has sat above $150 million for multiple consecutive months, which for a rank 97 coin is genuinely unusual. If Base chain continues its current growth rate and captures even 15 to 20% of Arbitrum's current market share by end of 2025, the liquidity demand routed through Aerodrome scales proportionally. In that scenario, analysts who track DEX revenue, not price speculators, but people looking at actual fee generation, are pointing to AERO price targets in the $3 to $5 range as a reasonable medium-term setup. Some more aggressive models, based on a full bull market rotation into DeFi blue chips and continued Base chain dominance, put targets as high as $8 to $10 by late 2026. Those aren't moon math numbers pulled from a Telegram group. They're derived from TVL multiples and protocol revenue comparables against veAERO and Curve at their peaks. But we have to talk about the risks, because pretending they don't exist would be irresponsible. First risk, Base chain concentration. Aerodrome is almost entirely dependent on Base chain succeeding. If Coinbase's ecosystem stalls, loses developer interest, or faces regulatory pressure, and Coinbase is no stranger to regulatory heat, Aerodrome doesn't have a fallback chain to absorb that shock. It lives and dies with Base. Second risk, competition. Uniswap v4 launched with hooks that make custom liquidity logic possible in ways that genuinely threaten the niche that Aerodrome carved out. If Uniswap deploys aggressively on Base with better UX, some of that liquidity demand could shift. It hasn't happened yet, but it's a real variable to watch. Third risk, token emissions. veAERO mechanics reduce circulating supply, yes, but AERO still has ongoing emissions to liquidity providers. If TVL growth slows while emissions continue, there's sell pressure baked into the model. This isn't a death spiral, but it means the price doesn't just go up automatically. The flywheel needs to keep spinning. Fourth, macro. If Bitcoin drops hard and altcoin liquidity dries up, rank 97 tokens get hit disproportionately. DeFi infrastructure doesn't become immune to broad market risk just because the fundamentals are real. So here's my actual verdict. Aerodrome is one of the few ranked 90-100 coins right now where the token design, the ecosystem momentum, and the revenue mechanics are all pointing in the same direction at the same time. It's not a gamble on a white paper. It's a bet on whether base chain keeps growing. And the evidence for that is pretty hard to argue with. The risk-reward at current levels for someone with a 12 to 18-month horizon and a position size they can stomach volatility on looks genuinely interesting. Not financial advice. Do your own research, size appropriately, understand what you own. But if you're building a DeFi-focused watch list for the next leg of this cycle, Aerodrome should be on it. Subscribe to Crypto Sayans. We post breakdowns like this every week, so you never miss a move. Hit the bell too, because the coins worth knowing about don't stay quiet for long.